So listen, if you are watching this video right now, congratulations. You just made the smartest decision of your trading career. Because what I'm about to teach you is going to change your life and the way you trade gold forever. I'm going to teach you how to trade gold the right way. From start to finish, A to Z. No indicator, no ICT algo bullshit, no nonsense. So grab your pen, grab your notes because after this, you'll never look at the gold the same way again. So let's begin. Okay, so now let's start with the strategy. This is the part that's going to change everything for you. This isn't some magic indicator nonsense. This is logic. Pure, simple logic. First thing you need to understand is time frame. Every beginner messes this up. They open the chart and instantly start doing stupid things. You've got clowns staring at the 1 minute chart, stressing over every tiny move like their life depends on it. Then you've got others sitting on a 4-hour chart acting like long-term investors when their account balance can't even buy a good laptop. Both are losers. Both are losers. All broke. The 30-minute time frame. That's where real trading begins. It's the perfect balance. It moves fast enough to make money, but slow enough to think clearly. The 30-minute chart shows you what's really going on right now. It gives you the time to think, react, and execute with confidence. That's how I operate. Calm and control. So from now on, forget all the noise, focus on a 30-minute time frame, and watch how trading starts making sense. So next, you just can't open your chart anytime and expect to make money. That's what amateurs do. They trade like emotional gamblers. No timing, no logic, no clue. Trading isn't about clicking buttons, it's about timing. You don't walk into a gym at 3 a.m. and expect a crowd. Same with trading. If you don't know when the market moves, you're just gambling away with your money. Now, sessions. This is important. The London session. That's where the real money moves. Clean moves always. London session is king. That's when the real money shows up. Clean, fast, aggressive moves. Perfect for our strategy. If you want results, that's where you should be trading. Your majority of the trades should be in the London sessions only. And then, New York session. Still good, not as clean as London, but if you use your brain, you can cause solid moves there too. It's fast, it's aggressive, but manageable if you are disciplined. And then, there's Asian session. Quiet, slow, boring. You can still trade it sometime if a perfect setup appears, but don't force it. No point wasting your energy when the market is half asleep. Now let's talk about volume. This is where most traders completely fail. No volume means no moves. No moves means no money. And no money means you're wasting your time. Simple. Always remember this. Volume is everything. Trade when the market is alive. Because when there's volume, there's opportunity. And when there is no volume, you're just donating your money to the market. Now next. If you want to make money trading gold, then stop trading garbage. You can't trade chaos. You need structure. You need clean range. Now what's a clean range? It's simple. It's when the market actually moves in one direction. Candle after candle. Smooth, clean, controlled. No confusion, no back and forth nonsense. That's what you want to see. Because when the market moves clean, you can read it. You can react. You can make money. Now even one big candle can be a clean range. One strong big move. That's momentum. That's where money can be made. Now there's the opposite too. The gay range. Candles going up and down, sideways, no moves, no structure. That's garbage. That's where amateurs lose money. But we are professional. If you ever see that kind of range, skip it. Don't trade it. Don't even look at it. Let the clowns fight in that mess while you wait for the clarity. Don't chase noise. We wait for control. And clean range is control. Always remember that. Now you need to understand this part properly. Because this is where most traders act stupid. If you don't understand key levels, you don't understand the market. This is important. So what's the key level? It's simple. Stop overcomplicating it. A key level is just the high and low of the clean range. That's it. Nothing more, nothing less. You don't need 20 lines on your chart. You don't need indicators from YouTubers. Just mark the high and low and calm down. But why market? Because price always come back to fill them. Always. It might take an hour, a day or a week. But it always happens. That's how market moves, from one clean range to another, filling the gaps. So when you see a clean range, understand this. Sooner or later, price will come back and fill it. That's the game, that's the pattern. The market moves from level to level, filling clean ranges. Your job is to not predict, your job is to observe, mark and wait. When the clean range gets filled, that's where you make your move. So stop trying to be a genius, draw your key levels, stay calm, and when the market fills it, that's your time to strike. Stop overcomplicating it. It's just the highs and lows. But if you understand them, you know how to make money. Now, how to mark the key levels. So I'll give you guys the live market examples here. No gay replay mode, no scam cherry picking price action. Like fucking live market examples. Because I know how it works. So here you can see, from here this clean range starts. So we'll mark the low of the clean range like this. And this candle closes red, so perfect. I'm doing it live now. So we'll mark the high of this range too. So basically these two areas are the key levels. And the inside range is called clean range. That's it. That's it. And we got one more clean range on the left hand side that you can see. So we'll mark it too. And we got one more above. And got this one here too. So now, if price breaks and closes after this key level, then it will go till this area and fill this range like it should. And after that, it can go up or down from this key level depending on where it actually closes after reacting from this key level. Okay, so now one more important thing here, that only the most recent clean range matters. Only the most nearest one to the left hand side. The nearest one. Old ranges are invalid, they are gone, they are finished, they doesn't matter, they are dead. Okay, so let's take more example from this place only. So look at this clean range, 3 red candles in a row back to back. Then boom, filled after this bullish candles high got broken. Then these 3 bullish candles made another clean range, which got immediately filled too, like it's working like fucking magic, back to back. Now look at this 2 bearish candle made another clean range. Now bang, another 2 bullish candle filled it immediately, like what the fuck is going on? It's free cash at this point, just free money. Then these 2 bullish candles has also made a clean range, which got filled too next moment. Like I'm a fucking genius, bro, I'm a fucking genius. Don't you guys just see how easy is this? How can you lose? So let's do it again. Look at this clean range now. Now mark the high and low of this range. And this another clean range to the downside. It matters too, definitely. Mark its low too. And this area too, that's a gay range. Low volume, avoid at all costs. Now we got 2 clean ranges here. And suppose that price hasn't actually moved like we're in a real time watching this. Now once price breaks out of this gray range and closes, bam, it's filled the ranges completely, easy. That's how you should be trading. Now let's talk about gay ranges. So gay ranges is the reason you guys are losing trading goal 90% of the time. You guys lose in these gay ranges all the time. Stuck and over trading, revenge trading like clowns. Look at this. How can someone trade this shit price action? Like what can you even try to do here? So avoid trading gay ranges, avoid at all cost. If you're really serious about this game, remember that. Now look at this. Just look at how perfectly price is forming and filling the ranges. This is what the professionals do. Wait for this to happen. Look at this clean range. Mark the key level and look at this and boom, clean range got filled. Then it creates another clean range. And guess what? It gets filled too. And it created another clean range. And just look how it's moving so perfect. How can you guys lose to this price action? And this range got filled too. How can you lose to this? How can you guys still be unprofitable when price moves like this? All you have to do is to mark the clean range and avoid the gay range. That's it. That's how you mark the key levels. No fancy ICD bullshit, no fair value gaps, no liquidity sweep nonsense, just price action. Now you know how to actually mark the key levels. So now how to actually take trades based on the strategy. So basically there are only 3 types of setups exist to trade. Only 3. Number 1, breakout setup. So it's just simply a breakout and most of you guys already know about what this means. Second is rejection setup. Or you can call it reversal setups too, simply just price reversing. Number 3 is continuation setup. Continuation setup means just following the trend, just follow the price. Now trading isn't about doing more, it's about doing less, but doing it right. Once you master these three, you'll stop chasing random moves and start trading with purpose. You'll know what to do and when to do, so there won't be any point of entering in FOMO, doing over trading and revenge trading once you master these three setups. So number 1, breakout setup. So breakout setup is simply price getting out of a trap zone or a gay zone. That's it. So I draw example here. Look at this zone. And price is just going up and down, back and forth, and then boom, it gets out and dumped. So you already know how to mark the key levels. So all you have to understand here is that always wait for a 30-minute candle to break and close out of the key level on either side. That's important because your monkey brain will always force you to enter in FOMO. Now here you can see this candle breaks out of the zone and closes. And then the next candle wicks up, you sell. You take your entry here at this point, and high of this previous candle will be your stop loss. And TP will be the whole clean range. Now let me draw a clean range here for the TP so it will be easy to understand. So yeah, look, if price would have come up like this, then this whole clean range would be our TP. So once again, real-time examples, literally in front of you. Look at this low volume range. So just mark it, and this is a gay range by the way. Never trade inside it. Now look at this red candle. This candle breaks out and closes after the key level. So our nearest clean range to the left hand side for our TP is actually super fucking far away. So in this case, okay, so let's take entry first. So this is where you should take your sell entry at this point. Previous candle's high will be your stop loss. And when you don't have a clean range on the left hand side like this, and this is very fucking rare, 99% of the time you'll always have a range to trade. So you should always go for 1:2 or 1:3 risk reward ratio. You can easily get 1:2 or 1:3 risk reward ratio always in these kind of conditions. But let's suppose if this didn't happen, and this candle actually breaks the high of this range and closes like this, then we would have marked this clean range because we got a clean range on the upside too. And this would be our entry, low of this candle would be our stop loss, and this would be our TP, the whole clean range. And that's how you trade the breakout setup. Now you understand how to trade the breakout setup. It's so easy. Just keep taking notes or watch this again and again. It's impossible to lose. Now on to the next one. Rejection setup. Now what's this? So simply rejection setup means price reversing from a key level, which I already told you what a key level is. So let me draw it for you. Suppose this is a key level and price moves towards it, and there's a strong resistance at this key level, and then boom, price went down. So this was a small example of a rejection setup in a simple words. Now some more examples. First, let's take a bullish example here. So there are only two ways to take a rejection setup. Only two ways. Don't complicate it. First one is buying as support, because we are taking a bullish example here, so buying directly as support. For example, price went up to this place, got back down, and there's this key level here. Why key level here? Because this is a support. What's the support? From where price has went up recently before. Look, even 130 minutes bullish candle at key level works as a support too. Now suppose price went down like this, and then we got this one bullish candle exactly close at the support area where price has already moved up before. So where to buy? Now buy once the next candle breaks the high of this previous bullish candle. For example, look at this carefully. This is where you will enter exactly at this place. And low of this bullish candle will be your stop loss at this point, exactly here. And your TP is going to be whatever the clean range on the left side is going to be. And same goes for sell, same vice versa. Easy, take notes. Now, second way of taking rejection setup is buying when price breaks the resistance. So we'll take another example here. Imagine price went up, then back down like this. And there's a support here. So we'll draw a key level here. And suppose price went down like this, and we got this bullish candle closes exactly at this key level like this. Now here you can see that the next candle didn't break the high of the previous bullish candle, like we saw previously, and it actually closes bearish. Now the high of this bearish candle works as a small resistance, because it stopped price from moving up. So we'll mark it. Now when price breaks the high of this bearish candle and closes, you will enter buys. Same thing. Stop loss will be at the bullish candle's low and your TP is going to be the nearest clean range. So let me actually draw a clean range here for better understanding. So this is going to be your TP, the whole clean range or the next key level which you marked. That's how you take the rejection setups without any nonsense. So let me clear this once again. There's only two ways to enter a rejection setup. Number one is buying directly at support. Number two is buying when price breaks the resistance. Like here you can see price closes bearish here and once the high is broken, you buy till the next key level, targeting the whole clean range. Okay, so let's take some real-time examples here, like real-time example. No cherry picking back testing sessions like fake gurus, only showing when it works. I'm going to show you the real live market execution. Here you can see that this big red candle, it's actually a clean range too. And there's this one bullish candle closes exactly here and created support. But the next candle didn't break the highs, you can see. And then price didn't went up and then it went down. Then the same thing happened here. Clean range on the upside, one candle closes bullish, but the high didn't get broken, so price went down again. Now this candle closes bullish again. Now the high of this candle got broken. Now this is where you will have to buy. This is where you buy at this point. Most of you guys would buy up and lose and then cry about manipulation. But this is where you should be buying. And low of this candle will be your stop loss. And we got two big clean ranges on the left side. So you could have taken the first TP here like easy. And if you hold it the trade a bit longer, then this would be your second TP. How can you lose? You're losing because you're stupid. This is how you take rejection setups. Easy way. Take notes. Things to remember. Rejection setup is simply price reversing from a key level. And there are only two ways to take a rejection setup. Number one is buying directly at support when one candle closes and the next candle breaks the high. Second is buying when price breaks the resistance by creating a bearish candle and enter once the high of that bearish candle breaks. And same goes for the sells. Easy. Now on to the final one, the continuation setup. So continuation setup simply means trading with the trend. Just follow the trend. Like if price is going up, then buy here and here and just follow the trend. That's it. Simple. So let's start with examples. Number one, bullish example. Now suppose price is moving up like this, move up, and then there is a key level here, which is also a resistance too, definitely. And price went there and one candle closes bearish there exactly at the key level. Now if price breaks the low of this bearish candle, then it will be a rejection setup, which I taught you earlier. But if price breaks the high of this bearish candle, then it will be our continuation setup. Easy. So once price breaks the high and closes, you will enter here. Low of this bearish candle will be your stop loss and your TP will be at the nearest clean range or the next key level, definitely. Isn't that easy? Now, bearish example. Suppose price went up like this and got rejected and came back down to the support or key level. Now we got this bullish candle closes exactly at the key level. So once the next candle breaks the low of this bullish candle, you'll take your sell entry at this point. And high of this bullish candle will be your stop loss. And your TP will be the whole clean range to the left hand side or whatever is going to be for you. That's it. That's it. Now let me show you some example from the recent live market. No need to go too far, just look at this. How good it's working, even in this type of market conditions. Price went down here and we got this bullish candle closes and this candle breaks the low of the previous bullish candle and then you can see price went down straight. You could have easily sell here and could have made good money. And we got another example just right next to it. Now I didn't plan it in advance, I'm just showing you what's going on in the market right now. All these guru cherry picking what they want to show you, but here's I am showing you how it's working in the current live examples. Here you can see price started moving up, back to back bullish candles. Then this bearish candle closes. And once the next candle broke in the high of this bearish candle, price is actually moving forward. And you can see we even got the clean range on the left side. And price almost filled it and reached the next key level. So this is how you can easily take continuation setup without complicating and execute trades simply by just reading price action and having some patience. No need of indicator, no need of drawing 100 lines, no need for ICD bullshit, just trading the reaction of price. That's it. Now on to the next one. Impulse entry. So impulse entries are very important sometimes, but only sometimes. So what's the impulse entry? So impulse entry simply means entering when price breaks the key level without being closed. So I told you always to wait for the candle to close, right? But there are times when you have to break these rules to take an impulse entry. But only professionals can do that, like me. But I'll teach you too, don't worry. But it's rare to do this. Not all the time, but it has its own rules too. So when to take the impulse entry? Simply don't. Just know. If you are a beginner, then just avoid impulse entry. No need to be a hero. Only take impulse entries if you are a professional, like me. Or if you are trading my concept and understood it very, very well, then yeah, you can take it. So first, only take impulse entry if there are no wicks on the left hand side. Suppose if there are too many wicks on the left hand side, it means price has been rejected from this area a lot of times. Like you can see these wicks. So imagine this candle hasn't closed yet and it breaks the key level, and if you took an impulse entry here, it's invalid. And candle might get rejected from this area and get closed inside the range again. So simply don't take impulse entry where there are wicks on the left hand side. Second, only take impulse entry if the candle which breaks the key level is inside 10 minutes. Like no more than 10 minutes long it should be. The only reason for this is because sometimes if you wait for candle to close, then it closes after 100 pips, 200 pips. Then boom, you can't enter anymore because it just fills 70% of the range already. And then you can't enter. That's it. So if the candle is under 10 minutes, then yes, you can take impulse entry. Number 3. Whenever you take an impulse entry, then always remember that your stop loss will be always at the same candle's high or low. For example, if you would have taken an impulse entry at this point, if there were no wicks, then your entry would be at this point. And your stop loss will be at the same candle's low. Not previous candle's low, but the same one. Only if there was no wicks and candle was under 10 minutes. So now you understand how to take impulse entry and when to take it and when not to take it. But if you are watching this video, it means you are new to this concept. Then just stick to the basics and master the basics first. Once you master the basics, then try to incorporate this. Now, mistakes to avoid. So lastly, some of the mistakes you should always avoid at all costs, no matter what happens. Do not do this mistake if you are serious about your trading journey. First mistake is, do not enter after a very big candle. For example, imagine price is consolidating inside this range and you are waiting for price to break out and close it so you can enter. And this big fat candle breaks out and closes after the key level. And if you are going to enter at this point, then it won't make any sense. And that's why you have to avoid, because your stop loss will be too big and price already filled that range. So avoid trading if candle closes too big and leave the screen instead of clown chasing another setup. Number 2. So here's another mistake you have to avoid at all costs. Do not trade the gay range. If you ever see price trapped in a zone, no clean range and price just consolidating, then just avoid trading gay range. If you are really serious about becoming a profitable trader, because gay ranges can force you to blow your account. Number 3 is crucial. Number 3 is a crucial point. I want you to take a note of this one specially. Do not trade if price has already moved enough. In simple words, volume exhaust. Do not expect price to just keep moving and moving. For example, price is pumping up, and then you decide to buy at this point. It's complete foolishness. Price can't just keep moving without correction. Always remember that. So always remember that you should have to wait for a pullback or a small consolidation to take your entry if price has already moved too much. So next mistake is avoid trading very high volatility. So whenever you see price going crazy, just big candles printing, especially in your session sometimes, then it's important to just sit on your hands like a fucking professional and let the market shake the weak guys out and let it settle. And most of you guys try to be a hero in the high volatility and blow your account. So next mistake is, do not trade news and bank holidays. Never, ever trade news. Because as I said earlier, crazy high volatility and volume. So avoid news and bank holidays. Because news has too much volume and volatility and bank holidays got zero, none. Markets just don't move on US bank holiday, and our main weapon in this strategy is good volume. Not too much like news and not too low like bank holiday, but enough so we can make money. So the next and last mistake to avoid is do not chase every move. Now this is going to hurt some of you guys' feelings because I know majority of you guys just want to solve the market. You just want 100% win rate and can't take losses and want answer for every pip move. Oh bro, why that happens? Always remember, our main goal is to make money consistently in the long run. Our goal is to not solve the market using this formula. So don't to sit on your hands and wait for your A+ setup. Don't just try to capture every pip from the market. And lastly, discipline. You can have any strategy in the world, but you don't have a discipline to follow it, then nothing is going to work. Nothing is going to work. You can open charts and start drawing random key levels and entering just because you feel like trading. Remember, trading is 90% waiting. And the most important part of the discipline is that you can do everything right and still lose. You can mark the key level, wait for price to break and closes, and you can enter perfectly, then boom, price hits your stop loss. Then what? Shit happens. Our job as a trader is to not solve the market, but to trade when the odds are in our favor. That's it. And when we do it on a long enough time frame, then and only then trading success hits. I know my strategy works, but 100% of the time, definitely not. So whenever your stop loss hits, then instead of acting like a clown and chase another trade, just sit and act like a man and wait for the another A+ setup. Because that's what we do. Alright, that's it. You've reached the end. Looks easy, right? That's exactly why most of you will still mess it up. You'll close this video, open your charts and start clicking buttons like a monkey who just discovered trading. Then you'll come back saying, bro, it didn't work. No, you didn't work. Here's what I want you to do. Watch this video again. Not once, not twice, at least 4 or 5 times. Because watching this once won't make you good. Take notes, pause, replay, do whatever it actually takes to master it. Now get off this video and go put in the work. And when you finally master it, remember who showed you how it's really done. Lastly, if you still have any questions regarding the video, then message me in the server. Tag me, I'll fix it. Or DM me only if you're in my mentorship group.